Following the Federal Reserve's October rate cut, markets were almost certain another reduction would follow in December. But growing uncertainty, fueled by the ongoing government shutdown and divided Fed commentary, has shaken that confidence. While the Fed's October move offered hope for further easing, Chair Jerome Powell has now made it clear that policy decisions will depend on incoming data, stating that policy is not on a preset course. Behind the scenes, Fed officials are split. Some policymakers still expect another cut at the December 9 to 10 meeting, while others urge caution given the lack of reliable economic data. The 38-day shutdown has halted key reports on inflation, employment, and consumer spending, the very metrics the Fed relies on to gauge its next steps. There's a clear expectation that rates will eventually fall, but it's not as certain as it seemed a month ago, explained finance professor Robert R. Johnson. Inflation remains a concern, but rising unemployment is fast becoming the bigger issue. Private sector data, including a report showing more than 153,000 job cuts in October, is already signaling cracks in the labor market. That has added pressure on the Fed to balance slowing growth against stubborn inflation. Analysts say Powell's cautious tone is meant to temper market reactions and keep expectations flexible as the data picture remains blurred. For consumers and homebuyers, the uncertainty means more hesitation. Even if another rate cut happens, mortgage rates are unlikely to fall significantly in the short term. Buyers are waiting for clarity, said Max Sliusarchuk of A&amp Yeat Mortgage. Rates may come down slightly, but staying above 6% is likely for now. Many prospective buyers remain on the sidelines, hoping for more favorable terms, while existing homeowners avoid taking on new loans amid an unpredictable economy. The uncertainty is also hitting the fintech sector, where lending algorithms and risk models depend on consistent rate trends. When the Fed's message is unclear, fintech platforms have to keep recalibrating their systems, said Sandeep Shivam of Tavant. Without stable data, it's hard to maintain accurate forecasts and lending advice. As the next Fed meeting approaches, investors, lenders, and homebuyers are all watching closely. Some economists still forecast a small rate cut, while others expect the central bank to pause until early 2026. The deciding factor will likely be how soon the shutdown ends, and whether new economic reports provide enough clarity to guide monetary policy. Until then, the markets and millions of Americans remain in limbo, waiting for direction from the Fed.